Thank you, Meerkat, for standing in for me the last couple days. This is D7 here at Grok Trade on Monday, November 9th, 2015. And overall, the markets are down. The Spider down 0.95%, the same for the diamonds. Nasdaq down more than 1%. Russell's down more than 1%, down 1.2%. The banks off by 0.6%, relatively stronger than the other indices. Financials off by more than 1%. US dollar break even. Crude oil down more than 1%. Silver down 1.35%. Gold up 0.3%. Fear increases by 5.5%. The VIXI is higher, and I happen to be long the VIXI. Looking at the spiders now. This is the ETF, or Exchange Traded Fund, on the S&P 500. And since I've been gone, we had this rising wedge, and there's our breakdown. Boom, 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 down, 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 down. As we drop with lower highs and lower lows, volume is ticking higher. Here you can see that. Let's go back to my MACD. You can see we had this bearish divergence we've been talking about. We go higher here on price action. We're going slightly lower here on the MACD. Negative ticks on the histogram. And sure enough, there's our drop. Down, 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 down. Here to the rising 20-day moving average, which definitely could be a place to find an area of support, looking for a buying opportunity off of a bounce relatively soon. Look here at the NASDAQ. The problem with the NASDAQ is this. We have a trend line. Support, support. We broke support today. Huge problem. Now this channel, price action has been in this channel for over a month, and for the first time, price action is now outside the channel to the bear side. Something to be watching for. Let's look at small caps. Small caps was up, up, and away, up, 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 and now it's dropping. We have a lower high, low, kind of an equal low. But it kind of has this, it's kind of a sideways step, actually. I can't call that a reversal pattern by any stretch of imagination. And something I want to do is go back to the spiders, and I'm going to show you the weekly chart. Look at the weekly chart here. We're just getting started. But last week went up, tagged it, came back down. Look at this, lower high, lower low, finding support at these levels here. Those levels come across right here, these areas of support here, finding support. I'm telling you, if we start to see more weakness the rest of this week, it could be a gnarly, nasty, bearish week for us. Now, something to be watching for. Let's go way down here to the MACD. MACD has a negative tick on the histogram. You can see positive ticks getting smaller, 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 smaller. All that is a MACD line and the signal line getting closer, closer, closer together. The further away those two lines are, the bigger the histogram ticks. The smaller distance between those two lines, the smaller histogram ticks. The reason we have a negative tick here is because we have a crossover signal line crossing over the MACD line. Because that has happened, this here gives us a negative tick, and that is a crossover on the MACD, so we're looking to start dropping, and on the weekly chart we could have a sizable drop to the downside. So that's precisely where we're at right now. If it's going to heal itself, it needs to get bullish quickly, at least go sideways, if not continue higher through resistance. But I think it's the area with least resistance is to the downside at this moment. If it can break those two horizontal lines coming across, which should act as some level of support like it's doing right now. It's good to be back. Catch you guys tomorrow. Like it if you like it. Share it if you love it. We'll see you later.